Okay, guys, can you guys hear me? Just put a 111 if you guys can hear me and see me. Mark, you can up. Okay, perfect, right? So, guys, welcome to the call. This is our third episode of the second season, Wealth Wisdom. I'm aware, obviously, it's a weekday, and can hear. Okay, cool, perfect. Right, I'm aware this is a weekday, and we've got a lot of the guys from America, which is still early afternoon for them over there. But nonetheless, we're here. I've currently got a special guest with me here today, and someone who is definitely worth listening to, but I'll get to that in a minute. Just before we do move on, just want to go over some house rules. Number one, obviously, respect the speakers here. They've given up their time, and it doesn't cost anything to be nice, right? So be nice, respect others. And second of all, well done on being here. Well done on giving up your afternoon where you could have been, watching your favorite TV shows or your sitcoms, watching some movie, in this afternoon after work. But, you're here, you're plugged in, you're learning, you're developing yourself. So well done on that. And thirdly, now that you're here, just devote this 1 hour. We won't be here more than an hour, but devote this 1 hour with absolutely no distractions whatsoever. Don't focus what's happening on Twitter, no Instagram, no YouTube. Put your phone on mute. Because as I said, the person that's going to be speaking today is really truly worth listening. And so who is he? So I came across Mark when I was surfing on Spotify, actually, just listening to a podcast. Previously I was listening to the Trading Coach, a fellow who we had previously on this on these kind of calls, and again they talking about the trading mindset. When I came across that list of podcasts, and I saw this Alpha Man podcast got about five-star reviews, and essentially it was exactly what I was looking for, because not only did they focus purely on traders like myself, traders like yourself, but going all the way to investment managers and portfolio managers and stuff. But not only that, these two individuals, so Mark is one of the co-hosts, these two individuals talking about the topic, number one, is very rare. Number two, they've got their hands dirty. They know what they're talking about. They've seen it for themselves, and then now they're pretty much reliving it with everybody else. So today I've asked one of the gentlemen to be here with us to talk a little bit about his journey, and how he got started in the game. What was some of the obstacles that he had to come across, and how did he overcome those? And also, now that he's a coach, now that he works with so many other traders on high levels, what are some of the patterns that they're seeing, what some of the psychological issues that they're currently facing, because one of the key things that when I heard in the podcast is we stress a lot when it comes to our money, like the pressure is on us to make money. But when you actually think about it, these portfolio managers, these investors at these banks, they have a different type of pressure. They have the clientele to feed back to. They have their own bosses, their own managers to give feedback to. They then get distractions during the week working hours, with so many meetings, so many they have to write reports and all sorts. Whereas traders like ourselves, where we're home based, or we're doing it part-time, or we're doing it full-time, whatever the case, or we're self-funded or funded with a prop firm, you don't have that kind of pressure. So, when, as I said, when it comes to these people, how do they go about dealing those pressures outside of the markets, and how do they deal with the pressures when also it comes into the market? So, without further ado, let me go ahead and unmute Mark. Can you hear me, Mark?
Yeah. Hey guys.
Thank you. First of all, Mark, thank you for being here. How are you today?
Very well. Good day. Thank you very much indeed. Good to see you guys.
Awesome. So let's kick it off with, as I said, with your journey. So tell us a little bit about how you kind of got into the industry, and yeah, let's start there.
Well, back in the late 70s, I was working for the biggest bank in the world, or pretty much biggest bank in the world at the time, which was NatWest. got into their sort of treasury business, which is, principally foreign exchange. Skipped into personnel for about 2 years, which is HR in nowadays terms. But I was told to pop into HR because they said, if you get to know the people that place you in your career path later on, it's good to get to know them and don't make a jump too early. So I jumped into HR and got to know the people that be crafting my career. And something popped up that no one really understood, which was the opening of the London International Financial Futures Exchange life back in 1982. And they sort of said to me, we don't know what it is, but you seem the right sort of guy to get into this so whatever you're going to be doing, because we don't really have a clue. So basically it was the beginning of the futures market in London, and I was there from day one as an open outcry trader, which is, if you've seen the film Trading Places, you kind of know what that's all about, or you might think you know what it's all about, but that was the oven, the cauldron that I was walking into at the beginning of my trading career, where you kind of had to just be relevant from day one. So that then led to me starting to flourish on the trading floor. And I did that by understanding that you kind of needed to have a view. If you didn't have a view on things, you were kind of just this other guy. But if you had a means of reading the market, of picking things up and actually being able to make a call, like, you could predict with quite a lot of success, actually, in terms of where things were going to go and how far they were going to go, and actually sometimes when they were going to go. And I noticed some guys from Chicago that came over to the London trading floor that were basically doing technical analysis, charting, point and figure, manual point and figure charting on charts that were 20 meters long, because it had no end. And I was an artist in my mindset rather than a mathematician. So I kind of thought, this is cool. I'm looking at an art form in financial markets that I kind of liked the idea of. So I started to pick up these skills and, made them more robust, did some reading around it, but really got involved in, making market predictions. And very, very quickly, I had Reuters pages going on that the global market was reading. And an awful lot of what I was saying was being translated into market movement, into resistance and projection levels, and got a big reputation from doing that. And of course, that carried right through my career, the ability to analyze anything using technical skills and having a view is really, really important if you're in markets, because you're not swayed by product. So you can be an equity trader, a commodity trader, random length lumber, frozen concentrated orange juice, oil, Brent, gas, You get involved in those markets and have a view. Even crypto, right? You just have a view. And that is vital. So that was a very early lesson for me, that to be part of the crowd and be relevant in that environment, I bothered to learn something that was new. It was within my comfort zone, but it was kind of slightly outside it because it was a bit of an unknown thing. And of course, then me putting opinion to Reuters globally, that was kind of me. My reputation was me making market predictions, but it really, really worked. And so that was my early bath into markets. And of course, I was a broker, but also a trader. And interesting enough, if you're a broker, you've got a trader mindset anyway, because you're looking after some of the biggest clients in the world, and you become their eyes, their ears, they're kind of their strategy guys, their price discovery guys. They're sort of, you become a mentor to clients. You're kind of helping them get through things, but you start to see them make mistakes. You start to, try to identify things that perhaps they should be looking at, rather than their pattern of behavior that may have been forced by habit that's led to them losing money. And so that became a real rod for my market direction for years. I mean, I still do it now. And of course, the podcast itself is sponsored by the Society of Technical Analysts. And I'll move on to that a bit later. So having something that translates into you being able to look at absolutely anything, and have a view becomes really, really important. And there's stuff there on YouTube. Quite frankly, a lot of it just sucks. You know, from a professional standpoint, you look at, I've seen people make up words, get nervous talking beyond the real basic stuff, and they just have no depth of knowledge. And it's the depth of knowledge that makes the difference. And maybe it makes that difference in that, you know, if the market is a 50-50 bet, right? Let's just say market is a 50-50. Why is it that 95% of people are losing money? If it was a 50-50 bet, you thought, well, 50% of people are losing and 50% are winning. No, but there's a skew to people losing money. And a lot of that is because they've not bothered to learn, you know, real robust principles. They've done like a cheap way of looking at it. And also they've not paid attention to their mindset, the management of self. Now, as a consequence of my early journey, I developed spinal arthritis in the 1980s. And as a futures broker in what was the Wild West, where, you know, we had the 87 crash, which was a big movement, scary movement, but we had lots of mini crashes and bigger crashes and all sorts of things going on. So I was getting panic attacks and stress. I had to get off trains because I just couldn't breathe. And so I had to do something about that. So I then discovered a method of self-management, which is more akin today from a mindfulness type of perspective, and use that as a power. It was kind of like my secret weapon that allowed me to manage me through trauma, through fear, through market catastrophe, to, you know, client catastrophe, because when you start the whole client relationships, their pain becomes your pain, you know, so you kind of have to nurture that. And of course, during the whole of that flow, I'd be getting trades that would suddenly be my trades that I'd have to manage and, you know, get rid of quickly, or, you know, sort of understand what happened. So all of these things start to add up into a philosophy that, you know, exists in me to this day, that, okay, you got to start learning from golden source. If you guys are new to the market, go to golden source. And I'll tell you what the golden sources are a little bit later. Alpha Mind podcast is a golden source because it's starting to reveal the fact that actually pain is significant. Losses are going, and understand that losses are part of this. Losses will happen, and they're going to happen, and they'll happen again. But if you look at how performers, you know, so the big sports performers perform, they calibrate themselves very, very differently. So they don't look at things as losing or winning. Okay, they look at an experience, a decision that led to an outcome. And they then analyze that outcome and say, what could I have done better? And that includes winning, and that includes losing. But there's an expectation that you're going to fail, you're going to lose, and you could have a string of losses. And it's getting in your mindset that that is going to happen. So you need to calibrate yourself really, really differently. But it also means that you need to manage things like risk process. You know, how much you're putting at stake. We had Garth McKenzie on recently on a podcast, and he said something quite wonderful. He said, you know, from a risk point of view, set your risk at a level that allows you to sleep at night. Okay. So if your risk is at a point where you go to bed worrying about your risk is too high. So setting your risk parameters appropriately is important. Putting your stops in at the right level on the right platform, because there are some platforms that guarantee a stop and others that don't. You know, you want to be carried out overnight. And do you want to be trading overnight? Do you want to be trading over the weekend? Do you want to be trading through data that you'd not had a clue was coming out? Do you want to be trading through, you know, political or economic announcements because you weren't aware of them being in the calendar? All those types of things you need to be really aware of. So awareness of the market needs to be far, far broader than you could ever imagine. Because there are moments when you think, okay, I'm not going to trade now because of all this stuff coming out. plus the analysis of it, because even non-farm payroll is the employment data and the top line level, but there's always revisions to previous data. And sometimes people react to the non-farm payroll, but then they'll look at the fact that actually the employment number itself is more relevant. We need to react to that and reverse everything we've done for non-farm payroll as a data point. So, you've got to ask yourself the question, well, is it clever that I trade through this in this volatility? Because you can step into a problem just through inexperience. You think, oh yeah, I'm going to make some quick money. Well, no, don't think about quick money. Think about little by little by little by little, building up money over time. And this idea of, you want your Lamborghini or I think if you've got sights on a Lamborghini, you're running a bit cheap. I used to trade with people that had sights on having an island, right? So forget your Lamborghinis, just think about a bigger thing. And actually think about more purposeful stuff as well. And think about your trading as kind of like your side hustle, and do something more important as well, because balance is really, really important to your mindset. But, so approach this stuff little by little is important. Manage your risk, manage your stops, but for God's sake, get your education right at the beginning. Listen to professionals. Don't listen to people that turn up on YouTube and say, hey, I got 10 years market experience. And do you look at their profile on LinkedIn and think, well, he's not been in markets for 10 years, but he's telling us he's in 10 years. What's he been doing? Mm-hmm. There's lots of people like that. Okay, I've got nearly 40 years of markets experience, frontline, pain and everything. So I can give you that sort of refresh of what really, really matters. Yeah. So that's where I'm going to start this conversation.
Awesome. Just before we do kind of move on, where did your passion come into? So like, how did you even get to know? Because, trading is something that, unless you've had family members that were born into it, trading is something that, is a bit out of the norm. So how did you yourself get into it, especially back in the days where there were no such things like, smartphones, so you couldn't really find out what was going on and stuff like that?
Well, I was gifted the role, but maybe that was me just having the right mindset to be identified and lifted and be told, you are the right person to come into this type of trading position. So I then was in it, whether I liked it or not. I guess I had to then survive. Because, over 10 years, I probably saw at least 10 people die. Yeah. Because of stress, because of the culture of that type of business. Yeah, 10 people that had died, and they were all less than 50. Okay. So, you're seeing these people die, and you kind of think, okay, well, survival is quite important.
Okay. So then moving on to that, what kept you going?
Well, I think, markets is very infectious. It was good camaraderie. We worked in dealing rooms. We had great clients. The market itself gives you a buzz. I mean, even when you look at it as an art form of analysis, you kind of get a kick out of getting things right and seeing things evolve. And it's enormously immersive because, of course, it straddles all these very, very interesting products. You got the currencies, you've got the interest rates, but you got the commodity series, and of course, they've got the wheats and the oils and all this stuff, which are very in news at the moment. But you've got freight, you've got volatility indices. So there's always something that's moving that kind of grabs your interest. So there's a learning experience with markets, of which I don't think there's anything else quite like it, where you're constantly learning. You've constantly got to have this growth mindset that it will evolve. What do I learn? What can I learn more? What did I learn from that experience? What else do I need to learn? And it's a life journey, really. And I think that's, once you're in it, you're kind of in it. And of course, you've got to be slightly protective of not losing your ass. But if you start off with the right beginning, then the chances of you being very controlled through that journey and very long-term thinking and being very measured and allowing yourself to be able to sleep at night becomes, a good sustainable philosophy.
Awesome. So, earlier on you was talking about how obviously, and it's every broker obviously, especially in the UK, must state their 75% people lose here with this broker kind of thing. So, you'd think we will learn from other people's mistake. Yeah, whenever you hear a newbie, whenever you hear a new beginner coming onto the markets, they have that same mentality that, oh, I just want to make that money fast. I just want to, quit my job. I just want to, as what you said, buy that Lambo, buy that house, pay off my debt, this and that. Why is it that people associate, and again, this is where your experience with having talked and coach with other so many other traders can come in. So why is it that we think trading can give us that?
Well, I think it's because there's so much rubbish out there on YouTube that tries to tell you that this is what can happen. What it doesn't tell you is the pain that can happen. What it doesn't tell you about, actually, you can wipe yourself out in seconds, never mind minutes. You can be wiped out in seconds. I've seen someone lose 2.5 million quid in about 20 seconds of their own money. Bang, gone, never to be seen again. So the pain is there. And I think the realization, some of these markets where you've had crypto, go up and up and up forever, and it seems such an easy trade. Now it's gone bear market. People are going, oh my God, what am I doing now? What does it mean? Well, give you a clue. Markets go up and down, and understand that markets vibrate.
Yeah.
And making money in that vibration is kind of what you want to be focused upon, rather than, particularly if you're a day trader, which an awful lot of people in your space would tend to be. Rather than thinking this is a buy and hold and hopefully it goes up, and it goes up 500% in the next 6 weeks. Not going to happen. Warren Buffett, with like decades and decades of experience, I don't think averages any more than 20% per year. That's Warren Buffett, right? So you've got to understand what's achievable. You might get lucky on something, but the chances are, with 95% of people losing money, you won't get lucky. You'll be constantly disappointed because you've set your parameters too high. You put too much risk on the table to achieve that gain you're never going to achieve. You got the huge risk on, but if that suddenly starts going against you, you're in free fall. And people doubling up, they get rid of their stops, they double up, bang, this has got to be the right trade. It's what Leeson did when we interviewed Leeson on the Alpha Mind podcast. That's what he did. That's what he did to take down a bank. The doubling up because he thought it was right. It's got to be right. It's got to be right. And bang, earthquake goes on in Kobe in Japan. The whole thing falls to pieces. So you got to be, I think, realistic. I think the message is that if you can run sort of a trading experience journey where you're just starting to pick up things as an early sort of beginner in the market, as kind of like a side hustle. If you put your house on it, you'll lose your house. So have this side hustle of just getting a feel. You want to get to a point where you can feel the market. And I mean that by what I'm showing you on the screen, that you can get a sense. You have this instinct about what you're following. And trade on that instinct, but obviously apply all these other rules and these other methodologies around analyzing the market. And actually, don't do what a mate does. So you get so many people to say, oh, I've started trading. I'm just a buddy of mine's doing this stuff. Yes, I'm doing everything he does, and I'm trying to make money. Don't do that. Find your own pathway. We've all got different personalities. It could well be that, your personality likes to be from an equity point of view. You like trading, equities are your kind of best match. Somebody else, it might be foreign exchange. Somebody else, it might be crypto, whatever crypto is, because I think we're all trying to work out what the drivers for crypto are, because you can't really define them that well, apart from it's more buyers than more sellers. But all the other products, which I call the more sensible products, the more regulated products, the more liquid products, the ones with tight spreads, they're the things that you should be looking at. So when you start to choose your product, think, okay, it sounds good, but what are the spreads like on it? What's the margin like on this stuff? What's the average daily movement on this stuff? How much could I potentially lose in a day if it goes wrong? And start to measure that around what I'm willing to risk. And you may go through 10 or 12 things and think, no, that's too busy. Well, that's not busy enough. And so matching yourself, your own personality and your acceptance of risk as well. Do you want to be like, as much as you can risk as possible, or very measured risk? But of course, I still would give you that little benchmark comment that risk enough to allow you to sleep at night.
Sleep, yeah.
And don't go beyond that, right? Because as soon as you start ruining your sleep, you'll come in the next day so stressed that you'll be trading for the hell of it and lose even more money. So those types of things, that the realistic nature of expectation and understanding that this is tough, right? That this is not easy. This could kill you. This could wipe you out. This could embarrass you. All of the negative things you could think of, markets could do to you. And in some shape or form, will do to you at certain levels of that. There'll be moments when you'll make a lot of money and think you're the king of the universe, and suddenly your head gets thinking, I can't lose, I can't lose, I can't lose. That's a mistake as well. You know, so this calibration, like I said, the professional performer, like a professional tennis player, I mean, the sort of the Federers of this world really is a real benchmark. You know, don't get carried away with winning. Don't get carried away with losing. Just do, and don't even call profit and loss. Don't even register things as profit and loss. Just register it as an outcome of a trade. And what was my response to that outcome, even if it's a positive? So every sort of trading event has an almost like a diagnosis of what went right, what went wrong, what could I do better, and just track it and keep it in a journal. There's a very good journal out I'd recommend to your guys. It's called Trader's Mind Journal by a friend of ours, Steve Ward, tradersmindjournal.com. It's around about 30 quid. It's cheap as chips, but it's super high quality. Get yourself a journal and start just taking a daily effort to understand the market, understand what you're looking at, why you're looking at it, what your trade entry points could be. And of course, all of that requires you to be having the right tools on board to analyze the market. Now, and the place to find that is the Society of Technical Analysts, who are a sponsor of the podcast. But and we're doing work with them to build out further curriculum, because they are the benchmark for technical analysis in the world. In fact, you can do some of their courses and get a qualification that's recognized by professional, businesses. And if you're looking to get into professional business, getting their home study course and their diplomas on board could be worth more than a degree. Okay, so I'm happy to suggest if they go to technicalanalyst.com/education/HSC for home study course, you'll find it there. It costs you about £1,000, but I think if you type in Alpha Mind, you get some good discount. But that is what you should be looking at as golden source, because you get within the network of what professionals are talking about, what methods professionals are using. You can come to professional seminars and understand the nuances of trading. And it's the nuances that make the difference, okay? It's the subtle things. It's those little subtle things that you won't read about in a textbook. It's bringing it to life. So, golden source, so technicalanalyst.com, we'll share the links to make sure you read it. But, thinking like that and thinking you need to kind of invest in yourself in this journey. This is not a cheap journey. It could be super expensive for you. And like I say, it could wipe you out, it could kill you if you don't put that effort into really investing in some very, very solid ground trading, sort of experience and learning to really set you on the right path. Even if you think you're on the right path and you've gone to YouTube and you learned a whole bunch of stuff, you're probably not on the right path. You probably know about 5% of what's really necessary. So you've got to do that work and set your right expectations. So little by little, and don't think you're going to get a Lambo by the end of next week.
Yeah. So moving on and incorporating Jake's question here as well. And earlier on, you was talking about mindfulness. So, we've seen a decade and we've seen an era of people just, purely on focusing on the technical analysis, focusing on what's the next best strategy out there that's got, close to zero drawdown whatsoever. And then, now we're starting to see, people like yourself, people like Stephen are starting to talk about how important psychology is, how important, being present in the market is. We've got another one, Dr. Steenberger. He also talks about these kind of stuff as well. So to you and to your experience, to your eyes, what's, as it says here, how important is that? How important is the technical and how important is the mindfulness?
Okay, so technical I've gone through, right? So
Yeah.
golden source, technicalanalyst.com, do the course, do the home study course, and you will accelerate your understanding, and you'll get amongst people that do this every day at a professional level. So you've got to do that. From a mindfulness point of view, you need to understand that that's all about presence and attentiveness and awareness of something called the present moment. Now, if you come at the market stressed, you're coming at it blindfolded, pretty much. You're seeing the bid and the offer in the market depth, and that's your view on the market. If you're coming at it less stressed, with stress being managed, your awareness is higher, your error rate is lower, your crazy decisions don't tend to happen when you're less stressed. They happen when you're stressed. So you're more measured when you're less stressed, but also you're more sort of accountable to yourself. So you're sticking on process better. You're starting to think ahead and putting appropriate trades into the market rather than inappropriate trades. You're putting the right stop in, the right risk amount in. So there's the whole awareness thing is there through presence. Now, Ray Dalio is a meditator, as you probably know. So I've been using this sort of superpower skill, and I'll call it a superpower, because other people weren't doing it, and they were asking me, how come are you so damn calm with all this shit going on? How are you managing that? I do this stuff. Didn't give it away at the time. I gave it away and started to teach it later on, because actually the world was so stressed, it kind of needed someone to step in and say, actually, I need to show you some things to do, around meditation, awareness, visualization, all those types of things. So it's this sort of superpower that we all have. It's not like you haven't got it. You just need to reveal it and pay attention to it and realize that the management of self, at a fundamental level, is actually the first part of your day setup you should be doing. And of course, Mr. Steenberg is a great supporter of the work of us at Alpha Mind. We've had great chats with him. And he celebrates what we do as well. And I think it's absolutely right that we have this conversation. If you look at if the market's a 50-50 bet and 95% of people are losing money, I can guarantee that the difference between that 50% and 95% is about mindset. It's about trading psychology. It's about how you manage self, how you have that self-control to stop yourself doing something, to actually notice a habit, to go and seek coaching because you're open and aware. You just want to have that growth mindset. And I think growth mindset is very much linked to presence. A lack of presence and a huge amount of stress and a lack of attention and the unwillingness to want to change is what a fixed mindset's all about. So, mindset becomes really, really important as part of this story too, and as part of this evidential base around the power of presence. So the power of the present moment and being in the moment, and being, if you're in the present moment and you're managing self, you kind of own your flow into the market. If you're not maintaining and really controlling that level of presence, the market's in control of you. So the market's picking you up on a daily basis and goes shaking you around and throwing you about and playing with you. And of course, these things build up over time. So you go to bed frustrated, you wake up knackered, you go to do the same thing again. You do 4 or 5 days of that and you start destroying yourself. Like I say, I've seen people die as a result of not managing themselves through very difficult times and not expecting trauma, thinking it's going to be good, it's going to be good, it's going to be good. But then suddenly trauma turns up and they just don't know how to deal with it. So expecting failure is really an important part of of trading psychology. We learn to love losses, but like I say, try not to think of it as a loss. Try not to think of it as a profit. Try to think of it as just part of a learning journey that you just need to sort of work out what can I do better next time.
So, you're talking about how we should really focus about the process when it comes to during the market, plan your trades and trade your plan trades.
Mm-hmm.
So when it comes to that's like down to the technicals, down when you're actually live on the battlefield in the market.
Yeah.
But coming prior to the market, so pre-market, should a trader have a routine to get his mindset right?
Yeah, I mean, if you look at it from a physiological point of view, you need to be hydrated. Okay, you need to have the right energy level.
Mm-hmm.
You need to have slept well, and you need to be quite oxygenated. You need to have quite not sort of a low level of oxygen, but a good level of oxygen inside you, so fresh air. So those levels at a basic level of us as humans, we need all those things to be right. We then need to start the work upon mental preparation. So yeah, you can do like 3 minutes of meditation a day. You can use something like Calm or Headspace if that's what you fancy. Might do something more specific. And my work is available for, I'll open it up to your members that, if 4 people want to do 4 2-hour sessions of my sort of Trader Mind boot camp, it'll cost you £500 each, but you'll be shown some pretty awesome skills. So that I'll make that available. That's £1,000 less than it normally is.
Mm-hmm.
But, so you want to go to someone that's done it. If you read a book, you won't get it. I mean, you read a book on mindfulness, you come away thinking, whoa, I don't know what the hell this stuff is.
Yeah.
And it's all a bit woo-woo.
Or you might be doing it wrongly, right? You might be following the instructions wrongly.
Absolutely. And I've been trained from the markets, but I've added that with people that have trained the Pentagon, with US military Mindfitness. I've been on their workshop. I was part of the government advisor team for Mindfulness Initiative for UK. And so I've been doing stuff more the corporate performance side around what mindfulness is. So it's kind of like a bit of a word that can seem quite fluffy. Yeah. So accept the fact it isn't. And actually, if you want to see stuff that will really transform the way you set your day up, then come on one of my, get 4 people together and we'll do a few coaching sessions around it. It's not cheap, but these things, we're in a space where that level of investment is pretty low, really, given the opportunity in the market. So mindfulness and presence, awareness to what you're doing, and understanding that even when you journal, be careful about. I know you said journaling is important, but if you register in your journal that you've lost money, for example, and you then understand that point in time was painful. And if you listen to Tom Canfield, one of our Alpha Mind guests, he talks about he lost like $500,000 in seconds, and he talked about it again in some years later in our podcast, and he just went silent when he talked about it, because you could tell he was re-feeling the pain of it. Wow. So pain can be refelt. So being reminded of a point in pain in your history, you need to be a bit careful about that. So I always say, well, if you're going to write down pain and make a note of it, do it in like size 2 font or something. So and do it in like almost invisible ink. So you kind of have to go and look for it to find it. But actually the learnings from it, put the positive learnings down in a bigger font, because you want to be going back and saying, well, what do I learn from these experiences, rather than being reminded of the trauma. Because if you look at depression and recurring depression out there in the mental health space, and I do a lot of that stuff as well, at corporate level, it's not so much the reality of life as we live it. It's where people think back with disappointment and relive trauma and think towards the future about how can I cope with certain things that haven't happened yet. So, trauma is around this world that's not really in the present, which is why mindfulness is used to keep people present, because it keeps them away from getting into the past and getting really upset and worried by it, about, what happened, I could have done better, and all sorts of things, and look into the future with all sorts of anxiousness and anxiety. So presence kind of keeps you in that sweet spot of mental agility. It's a calm place from which you can perform at your very, very best. And you'll hear performers, you'll hear, people at the peak of their performance careers, people in the military special forces. We're talking about people like John McCaskill, who's now doing Men Talking Mindfulness as a podcast, and he's been a guest of ours. They understand that this is a superpower, that if you're going into a volatile, unpredictable, complex environment, that you're not quite sure what's going to happen next, you kind of can't go in there dumb. You've got to go in there mentally ready for absolutely bloody anything.
Mm-hmm.
Absolutely anything. And the mindset that can say, no, that's wrong, I need to stop doing this very, very quickly. Because in markets that's very pivotal in how we should be thinking. Where you think it's a trade, but en route to pushing the button, you have the ability mentally to go, no, it's not a trade. And that's a skill that can be learned. Like I say, it can be learned, but it becomes a superpower. So you kind of need to think of trading as kind of like gaming in a way, where, in gaming, you've got these challenges, gamers will look for powers to add to themselves, to perform better, to go faster, to be, to have an extra life, because they know they're going to get shot at some point, so they need another life. And collecting lives becomes quite important. Trading is kind of the same thing. So collecting tokens that are superpowers and latching them onto you for a challenging journey is kind of the mindset people should think about in terms of their approach to trading.
Yeah. Just what you was talking about, from that push of a button, it just reminded me, and I'm going to echo what Stephen was talking about. Trading is the only industry whereby from day one, you are against the very best. You are against the Paul Tudor Jones, you are against the George Soros. So yeah. And then, earlier on, I obviously asked you that question about why people, think they can get into this space and then make that money quick. And this is also what they need to realize, that they are against people who've done their works. You're against people who've been there, done that, wore the t-shirt. They've got themselves an edge. They've broken down. They've rebuilt themselves, and then now they're now on that level of success. So what makes you think day one or day two of your journey you can already start making some sort of money here? So that's really good what you've
I just want to add to that. I just want to add to what you just said there, because in some cases, genius turns up that actually breaks that pattern.
Yeah.
Okay, so genius is possible. So, and I know that certain hedge funds are now getting Gen Zs, and attaching them as a new joiner. They were attaching them to a senior trader. So a senior trader can start to understand new skills that have come from a world that he just doesn't understand, and can learn by them. And they're seeing an increase in their performance as a result. So that genius can happen. Okay, so I wouldn't say that it was impossible for someone to turn up on day one if they've gone through enough research of themselves and getting the right skills on board and really spending the time and effort of understanding what they're playing with. Genius could happen. Okay, so don't get carried away, but genius will know it's genius. You kind of think, okay, I'll kind of suss it out. I can see this movement. In fact, we had someone on the podcast recently, Oliver Kell. This is his book. That's Victory in Stock Trading. So he was the US investing champion back in 2020 with 1,000% return. He was pretty damn smart. But I did ask him in the podcast, well, what could you have done better? Because I'm a bit of a joker.
Yeah, yeah. Okay, cool.
There are some things he could do better. So, it's interesting.
It's a couple of bits. All right. Always that case, isn't it? Cool. So just reading the time, catching up very quickly. I am going to open up the floor to, obviously, you guys earned the right to ask some questions. So we're just gonna do on a first come, first serve basis. So go ahead and throw your questions in. Whilst you're doing that, Mark, I've just got one last question from me, which is, right now, as I said, you've been working with a lot of traders. What are some of the patterns that you're seeing, or you saw? And how did you go about solving that?
But I mean, bad habits, you mean, yeah?
Yeah. Focusing on that. And maybe if you got some time on the good side as well.
Yeah, people where their ego was too big and they needed to be stepped back down to reality. So they were peeing off their family, they were peeing off their colleagues. And the colleagues and the whole structure of support behind a trader was acting against them, because their ego was just out of control. So getting people to understand their impact on others within the concept of a trading environment, and that can include family. So in other words, families where they think, well, where's dad? Well, he's been 19 hours trading and he's still trying to make money. And so I know when the US military did this special program around mindfulness for their veterans, they were getting messages from their from the sons and daughters of those vets saying, thank you for bringing dad home. And they meant that mentally, because normally their father would come home from the battlefield, and you can sort of see how this impacts trading as well, but they'd be stuck in their thoughts. They wouldn't be very engaging with the family. They'd go to bed, they wouldn't sleep very well, they'd wake up grumpy. So your impact on your family could be something that's going on that reflects how you're just not managing yourself as a trader.
Yeah.
Okay, so those things become super important. And life is more than trading. If trading is your life, then be slightly careful, because there may be things that you're missing out on, loved ones included, and they may get super fed up with that at some point in time.
Yeah.
You need to kind of step back and say, where can I get balance? Because balance is just ever so important.
And, nowadays we have, we've got 5G right now, pretty much everywhere now. And we've got obviously smartphones with each and every year we're getting new ones with newer technology. I guess, to some extent, that also doesn't allow us to detach from the markets. We could leave the trade station, we could go somewhere, but, we can still receive notification and alerts and stuff. And that doesn't help us when it comes to detaching and really enjoy our present moments with the family. So yeah, just watch out for that. Maybe, delete the app or whatever the case is.
Yeah, step away. I've had enough. I'm stepping away. I'm going for a walk is the greatest thing to improve your trading.
Yeah. I mean, for me, I've incorporated my trading window within my trading plan. So that allows me to, obviously, number one, be more disciplined, follow my trading plan, as well as I know, okay, cool, I'm at the end of my trading window. It's pretty much done now. Cool. So is there anything else? Because I know at the start you said you wrote some notes that you wanted to go over. Anything that you missed up? Anything that you really want to add?
You can find all about us on www.alpha-minds.net.
Yeah.
Twitter AlphaMind101 and AlphaMind102. Steve does more Twitter than I do, but I still do stuff from time to time. I'm there on LinkedIn. But I'll go back to some of the fundamental critical points. Okay. Markets are difficult. They're not going to get any easier. So the only thing you can do is just get smarter. I think you saw that as a tweet that went viral from one of my podcasts. And it is absolutely the case. And that smartness comes out of effort and investing in yourself, and actually gets thinking, well, what have I learned so far? Because it might just be garbage, right? You might have just been taught the wrong stuff. So like I say, technicalanalyst.com, HS home study course, is the right thing to learn. Steve Ward's journal, Trader's Mind Journal's got other things in it that could be really useful for you. Go to people that know what they're talking about. And of course, if anyone wants to go on a 4-people coaching program over 4 weeks of 2-hour sessions, then if they got £500 to spend, then they can send you a note and we can have a conversation. Because actually some of the subtle stuff, particularly around the mental game stuff and the inner game stuff, needs to be coached on a more personal basis. And we'd kind of lose it a bit if we tried to do anything in this type of
Yeah,
session.
yeah. So that was pretty much it. I appreciate you. I appreciate for coming up. Is there just a quick question? Do you have any books out there?
I'm writing a book.
Okay.
It takes a long time. I'm author of Building a Case for Business for Mindfulness in the Workplace,
Okay.
which is a UK parliamentary thing I got involved with. I
Mhm.
do a lot of thought leadership stuff for people like NatWest. So they come to me and say, we need some material around workplace and digital workplaces. So
Right.
I author that material for them. But some of that not necessarily trading, but that's not the point, because actually it's all relevant for the sort of the world that we live in. And so
Yeah.
being aware of distractions and how we deal with distractions and keeping ourselves relevant and not doom scrolling. At times like this with so much going on,
Yeah.
you could spend half your life just scrolling doom and doom and doom. In times like this, tune out a little bit, right? So you can't control any of the stuff going on. So I guess tune out rather than get too close to it. If you get too close to it, you become part of the news.
Yeah.
And you become this character in this emerging sort of story of doom that you've self-created that looks to the future with all sorts of anxiety. And if there's ever a moment to be present, it's now.
Yeah.
And so just control the channels you zoom into. Get some positivity into your life. Listen to rock music, watch some comedy, those types of things, And I thought questions turn up in the world of questions. In terms of technical, did you hop from strategy to trade? Do you have a specific style of trading that you prefer? Many thanks for your time. Well, I think if you have a plan, stick to it. You may want a different plan per product. So you may want a different, if you're analyzing the market technically, you may want a different plan for stock markets, to commodities, to interest rates, or to foreign exchange. And you'll be able to work that out yourself once you've had a good foundation. I think, be honest with yourself that if a strategy, I guess, doesn't work, even though you might put so much effort into creating this wonderful strategy, some people carry on because they think, well, I spent so much time on it, I'm just going to restart and reset. Sometimes it's best to just throw the piece of paper away and start again and identify a new strategy with the right risk parameters and the right profit and loss and all those types of things. So I think it's a very good question from Jake, that having agility in what you do is really important, and an honesty and flexibility, because you may go from a Fibonacci style strategy to an Elliott style strategy to an Andrews Pickford strategy to a moving average strategy to a moving average momentum strategy. The most successful trader I ever knew, probably one of the best traders ever, wasn't a trader. Okay, he was a property developer, and that's all I'm going to say. But he was a financial market trader, as kind of like that was his side hustle, but it was ridiculous. He never took a loss. People was like, it's impossible. Never took a loss. Okay. And he traded the market from the perspective, he gave me, and I knew his system. So we built the system together, and it was this methodology of approaching the market. And I sent him like pages and pages and pages, like this thick, of printouts of daily price action. This was in the early 1980s, right? We could only send like a photo sheet. And it was this, I sent it this thick of chart, and he went through the whole damn lot. And he understood that the market, whilst it's got a direction, there was a natural direction to the market he traded. Within the day, the market vibrates, and it often goes through the same level several times. And he just created this system, and I know that system even to this day, where he just printed money. But he printed it, he had no screens. All he did was he analyzed the market, and it gave me the instructions. And I then basically just follow those instructions, and it constantly made money. Another question's turned up. I've seen bankers concentrate on volume profile candles and order books rather than charts. Well, I think market profile is really, really interesting. And actually looking at market profile volume, which kind of is a similar sort of thing, will give you great insight as to where the levels are in the market that are worth trusting. Because of course, if you start to see a chart that's sort of this long, a bar chart for a particular day is this long, but you recognize that this part was a very low volume spike, but this is where the big volume of the day was, then trust where the big volume of the day was and where the highest volume point was. You know, don't think of that territory where you've had this, it's kind of like an aberration. And if you analyze the market from a volume profile point of view, you do get, from my view, a better sense as to what the market feels like in terms of support and resistance that's very non-standard. So you won't see it through the bars, but looking at volume, you tend to get a slightly better feel for a market on top of, so it supplements all the other things you're looking at. So I'd take us a look at all these things, but have quite a big radar as to what drives your decision making. And certainly anything that concentrates on volume will give you a slightly different feel as to where the critical levels are. Because of course that's where most of the flow went through, particularly the high volume flow. And the low volume levels, you almost think, well, the market didn't have an opportunity to reveal itself in those low volume spikes. It will probably go into that territory again and build better volume. So yeah, it's worth looking at the market from as different points of view as possible. It's not just about price action. It is about a deeper thing. And, you know, depth is a bit more controlled nowadays because you can't spook the market on depth, but it's constantly fluid. You don't know who the players are. You don't know whether it's a big corporate hedge that's come through, you know, someone doing a big oil trade. And so sometimes you can get a bit spooked by market depth. It might just be a sort of almost like a non-directional structured trade that goes in the market that doesn't really suggest that that person's got a negative market view. It might just be because that gets needed to happen for them to hedge something. So sometimes you can get misled by market depth and thinking the market's really, really overweight, where actually it's not overweight from a proprietary point of view. It might be overweight because someone's just trying to put a big hedge on. And as soon as the hedge comes off, then the market starts rebounding. How can you trade order books without knowing all the other order books? Well, you can't. You know, there's no easy way around this. You just have to be as observant as you can with the data that's available to you.
Okay, cool. I think we'll look to wrap it up there, guys. So Mark, once again, thank you so much for your time and your insight and your experience, you know, that you shared here. Definitely. Yeah, thank you. Yeah, definitely. We do appreciate you and also for your time as well. Obviously, Mark went through the, you know, his Twitter handles. He's also available on LinkedIn, and definitely, guys, plug into that podcast. So it's Alpha Mind Podcast. It's available both on Spotify and YouTube, whichever one you prefer, whichever one you know you listen to mostly. But as I said, and as you know, Mark also said as well, it's really the content that's totally different, totally rare. That's been shared out there. So Mark, once again, thank you so much, and thank you guys for plugging in as well. I will add the show links. I will get some links off you as well, Mark, in terms of, you know, all of the technical stuff as well, and put that all in the show notes, and so you guys can have access to that. So once again, thank you so much, Mark.
Yeah, appreciate that, Guppreet. Great to be with you guys. I hope some of that's sunk in, as it were, and you've been attentive and aware to this. You know, you just need to invest in yourself. It doesn't come cheap. Set your expectations at the right level, and you'll do well. If you don't learn from the right source and set the wrong expectations, then you'll be very, very quickly thinking about this as a historic little flutter that you did, because you have to be doing something else. So if you want sustainability in what you're doing, just be very sensible about what you do.
Yeah. Okay. Thank you so much. Bye-bye.